Good afternoon, everybody. Good morning to our European friends. Yeah, and welcome to another day in paradise in the foreign exchange markets. Reasonably quiet in Asia today, and not most of the moves happened overnight. Much of which I think we sort of preempted yesterday that the U.S. dollar may strengthen. It's sort of got exactly those factors we looked at yesterday. All seem to be pointing towards a modest recovery in the dollar, and that's what we saw. And led by dollar yen, as sort of we had a risk on type the appetite came back, and so dollar yen's up 100 points from where we were sitting yesterday, and euro is off a little bit, and yeah, sterling's unchanged with euro sterling slightly lower. So we'll go into these pairs in more detail in a minute. Nothing major on the sort of on the geopolitical front. We had the UN Security Council adopting new North Korean sanctions. I'm not sure who that and whether the North Koreans pay much attention to that. They certainly won't stop them firing off their test rockets. So yeah. Anyway, it didn't really have much of an impact. And yeah, on the euro side, we had a little bit of verbal intervention from some of the ECB members yesterday, which just goes to show that they're paying a little bit more attention to this. The levels that we're seeing in the euro, 119.70. So it's come a long way. So let's see what we can find on the trading front. My favorite trade for now is dollar yen. So I'm looking to sell. I've been obviously, you know me well enough by now. I'm bearish dollars, and I'm happy to look for selling opportunities. So I will post a signal when I'm done here. But the level I'm looking to enter is somewhere here around 110, the figure. So I'm looking here at a Fibo of 110.10. So let's just talk this one through. This is on the daily chart. So obviously we had these, the post-election highs earlier this year, 118. Serious 10 big figure dip, back up to 114, call it 114 and a half, dipped again but couldn't make a new low, and then back to test 114 and a half, and that level held. So that is the that's all we have to go on, is that this is a very strong resistance level, and we may be seeing an increase or an increased downtrend starting from here. So if that's the case, and look, it's been reasonably steep. I mean, it's not been, obviously not vertical, but it's been a reasonably steep fall, and steep falls tend to retrace relatively shallow, and that's the 40% or the 38.2% retracement. So 114.50 down to 107.40, which we saw on Friday. And just remember how terrible it looked when it was down there. It looked as if it was going to zero in the next minute, and nope. Here we are, bounce back up again, and we get to present levels around 109.60-ish. So I'd look at the 40%, 38.2% retracement of this move, 114.50 to 107.40, and that takes us up to about 110.10, and I'm quite happy to sell into this rally. Any levels around 109.90, which is where the just to note down, corporate offers. So the Japanese were, some of the Japanese banks were reporting sort of solid corporate offers around 109.85.95. So that's where I will also be selling. I'm not, I don't take huge positions, so I don't have to enter exactly on the dot. So I'm happy to sell into this region up here. I'm going to probably place my offer just around here, 109.85. About 30 points higher than where we are now. So that's the one I'm keeping an eye on. Yes, for all the factors we looked at yesterday, the dollar has had a nice little rebound, but yeah, I don't expect it to last. And we look at the euro in a second, even if the dollar does recover a bit against the euro, I just think this euro yen is also a little bit overdone. So, and we look at that shortly as well. So that's why my favorite trade today is to sell the next 30-point rally in dollar yen. So let's move down and have a look at the euro. So yeah, that's a daily chart, not a huge amount of good to us. Let's have a look at a 4-hourly chart. Yeah, nothing. So I mean, we've been talking about this. It started running out of momentum once it hit up here around 119. Dipped, obviously had this dip down to below 117, made the high, shot, pretty strong retracement, made a marginal new high but couldn't go on with it. All of this points to me that we're in an uptrend, an absolute, rock solid uptrend, but it's run out of momentum. So for now, range trade is the play for me here. And look, it could be 117, 122, who knows. I mean, I would suggest 400, 500 pips should cover the range, and that we'll see this for another probably 6 to 8 weeks or something of that order until we get a fundamental break. Now the IMM data from last week. Now remember, this is from last Tuesday, so this is a week old, so it's not a heck of a lot of good to us, but it did show that the US dollar shorts were building again and the euro longs were extending. That was shown, if you remember back to yesterday when we looked at that BNP data, the BNP positions, they sort of showed the same thing, even though the IMM is just a part of that. It's not the full story, it's just a part of that. But just to reiterate, the dollar shorts were definitely building. This is sort of a week ago, and the euro longs were extending, and I think we're just seeing that starting to unwind a bit. Any market that's get overdone, we're going to see some unwinding. So if I'm bearish dollars, which I am, I will not be playing it against the euro because I'm expecting some range trading here. That's my expectation at the moment. Look, I'd guess we're right in the middle of the range. Toss a coin. I really would have no idea what to do at 119.75. I think anything towards 120.50 is a sell, and anything probably down towards 118, the figure, is a buy. So, gun to my head at the moment, I'd probably prefer to be short, but I'd rather play that on the crosses, and maybe even euro yens, which we'll have a look at yet. So, let me have a brief look at any of the news on the euro. Now, just that sort of bit of verbal intervention yesterday, just stating as all central banks like to do, that the the euro's a little bit, their currency's a little bit overdone, and so if we get an extension of this, you're going to see some sell-offs in the euro, especially as the market is long. So all in all, I prefer to play euro on the short side on the crosses. And let's have a look at this one. So this one's been developing for a while. Let's have a sorry, bear with me, on the daily chart, and we've been looking at this sort of holding pattern, and I think this is what we're going to see: 132 toppy, 127 bottomy. So that's the range to play here. So, and we may see a test of that later today. I mean, it's just at the moment it looks like we possibly could. So let me just get my calculator out here. So let's say, for instance, dollar yen does get up towards 110, the figure, and euro gets towards 120. So in other words, dollar yen goes up sort of 40-45 pips, and euro dollar goes up 25-30 pips, then euro yen's going to be trading up here, and I like that. So I like to sell that. So that's probably even a preferable trade to dollar yen, is to sell this rally in euro yen towards this sort of level, 131.85, 132 the figure, let's say. So when I'm doing that, I like to then move on to a half-hourly chart or something, and wait for some sort of an exhaustive spike or some sense from the charts that it's run out of momentum. I don't like selling if we just get a sharp spike here and then it just consolidates in a very tight range. I wouldn't be selling it here. It's just, why? It looks to have a little bit of strength still, so I'll just wait. And if that level up around as I just mentioned, 132 the figure, if that holds and starts to form some sort of a top, then I'll be selling euro yen as well. So I quite like that trade, and I think that's one that I'll be watching closely later during the European session. So definitely a level to watch there, 132 the figure. Euro sterling is going to upset me now because I have to talk again about my bad trading. So yeah, look, I was short right up here. I mean, I made some money on it down towards really a lot of sort of this level here, just below 92 the figure, but I've left a lot on the table, and it's pretty hard to get back on something once you've been thrown off. and I've missed it. So that's pretty annoying, and I'm pretty sure we're heading here 89.50. Um, the We've got yeah, again on the IMM data, again this was reiterated yesterday by that BNP survey. Sterling shorts increasing, euro longs increasing, so market is long this pair, euro sterling, and starting to retrace. And I don't think it's really picked up excessive momentum yet, so yeah, I think we could get a really sharp move down here, 89.50, just as the first stop, I think. So yeah, I'm bearish, and we've got the Bank of England on Thursday, the MPC, and pretty much all are expecting some type of an increase in hawkishness, let's put it that way. But yeah, if we do get more, if they're more hawkish than expected, all of those big structural sterling shorts are going to get are going to start getting worried. Now let me just take you back here to sterling and give you a sense of what the really big asset managers and corporates and etc. Are playing at. Now you think back to where we were around the remember the whole Brexit debacle. So we were trading. Remember that we were trading around here. So we were trading around here, went down. Oh, this was the day here. Remember that? So it traded. I think it started 145, went up to 150, and then collapsed. So the big structural shorts, they would have been putting on some protection here, but they would have been getting in aggressively. And this whole move down to, first of all, 128. So they would have been selling from, that break down there, 142 down to 128. They sell more here, and who knows, they may have even added to shorts down here. So these guys are going to be short, structurally short, with an average of, look at, I don't know, if they're doing well, their average is probably 135. So they're not worried. Now you and I, we're worried about our P&L and how many or how much dollars we're going to lose on our own personal accounts. A lot of these asset managers and the like are more worried. They're just worried about their jobs. Is it going to cost me my job if we're on the wrong side of something? So they're not worried yet, and they won't be worried until we start getting daily closes, weekly closes here above 135. But if they're structurally short at 135 and the market starts trading at 138, they're going to start getting worried. And they're not going to stay short for the next 5 years whilst Brexit has been sorted out. So I expect, and look, I've been saying it for the last few days, I think we're sterling's in for a sharp acceleration higher, and it's going to take out a lot of these big structural shorts somewhere up here somewhere. The pain, I don't know where the pain level is. We will only know it when we see it, and once it goes through there, it's going to be pretty nasty, I'd say. You're going to see a 300 and a 500 point gap in cable. So that's my view. It's a pretty strong one, but it's a big risk, I think. So all it may take is a much more hawkish than expected MPC, and sterling will be off to the races. So that's the bigger picture in sterling. I think we're going higher. Obviously we've got more immediate resistance here on the daily chart at 132 something. Yeah, 132.65, and so it needs to get through there first. That needs to be respected ahead of the risk event. So we may get a test and a fail. That's often what happens, but we've got about 48 hours to go before the over 48 hours to go before the risk event. So you may easily see a test up here somewhere, and then some consolidation. So look to trade I would suggest a 131, 132.50 type range, with a bullish bias. That's my view on sterling. That we are we're gonna test this level and maybe take it out. But again, don't be taking any silly risk heading into a big risk event like the Bank of England. It's just not worth it. You can't build a career on one lucky event. So that's cable. Let's have a look at sterling yen. So now we're starting to see dollar yen's ticking up a little bit here. Cable's holding on. So sterling yen, yep, looking strong. Daily chart. Look at, let's just go to the longer term chart here again, because this has also come down a long way. Look at it, it's come from 195 down to 125. That's a pretty significant drop in anyone's money. And now we've, after initial retracement, we're starting to consolidate. So all it's going to have to do is get back above here, 148.50, and it'll go again to, I don't know, I'm guessing here, but maybe 160, something like that, and before it settles down again. So yeah, as I said, I'm bearish. Bearish dollar yen. I'm happy to sell that rally, but I'm even probably more bullish on the cable than so. I think this cross eventually, once this 140, 148 range breaks, it'll break higher. So that's sterling in. Let's have a look at the look just on the short-term charts. Yeah, so we're breaking higher at the moment. Support. Anything down here, 143 the figure, seems a long way away now, doesn't it? It looked, it looked like a good sell zone there for a couple of days, but now we've got to, just, the inverse head and shoulders guys will be looking at this one. Let me just draw in a couple of lines here. So here's our support, and we go again. And yeah, so you see we had the break above, yeah, probably more like this one here. I mean, it's not, it's a little bit inexact, but 143 the figure was the break, and we've now had an acceleration higher. So this looks pretty bullish. So I'm talking myself here into a long cable position because this looks like good support in sterling yen, but I want to sell the rally in dollar yen, so that's screaming at me that I need to be buying. I need to be buying dips, any big dips in cable. So sterling yen looks like a buy to me, especially on that 4-hourly time frame. The shorter term guys, look at, you're going to pick up some, obviously you're going to hit it, pockets of resistance somewhere along the line. So but we've got fresh air pretty much up to here, 146.5. Looks like a nice pair to be trading there. Big range, 143, 146.5, and yeah, just trade it. Put your trading hat on and go with the short-term flows. Yeah, so as a nice one there. Buy this dip in sterling yen. Anything down to 143 the figure looks to me like a very, very good buying opportunity. So they're the majors. Anything else to report on the sterling front? Well, not really, but yeah, so obviously oil still has some sort of an impact on the on sterling, and the Saudis overnight told OPEC that they cut their oil output in August. That's from July, and yeah, that took, yeah, dollar CAD is obviously the main one to trade when you're talking the oil moves, but yeah, obviously sterling also has an impact with the North Sea oil. So yeah, whilst we're talking about oil, dollar CAD, the loonie. So whilst the dollar went up against everything else yesterday, and we were looking at this, buying this yesterday here, 121.20, 25 something, but it's basically done nothing. It's it got up to 65 and fell back below the figure, and this was back on the so on the oil. On the oil story, the Saudi report that sent dollar CAD back below the figure, but it's not called the loonie for nothing. So the dollar goes up against everything except the Canada, where it goes down. So go figure, as they say in the classics. And yeah, good luck trading that one. What does that mean? Does that mean it's just going to hang around here, this level, and then close this gap? Remember this gap we were talking about back in the Bank of Canada? That seems like an unrealistic move still to me. I don't see why the market reacted so strongly to the Bank of Canada's 25 base points rate rise when it was expected next month anyway. So yeah, I'll have a that's dollar CAD. Okay, I'll have a look at sterling CAD as well. Where have we got sterling CAD? Must have taken it off. Somebody's just asked me to have a look at sterling CAD. I know one of our better traders in the portfolio, so he's been trying to buy this pair in the last session or two. So not a pair I trade very often. I just don't know the moves well enough, and I'm based here in Australia, and the Canada obviously is going to move most during the North American session, and then it tends to go to sleep during Asia. So that's why I tend to leave the Canada off off my wish list. But we've got an obvious support level here at 157.40, which looks like it should be tested. Let's have a look just at the hourly chart and see if there's any sign of a bottom forming. Well, I'm not seeing it. Maybe somebody else sees more than I do, but it just looks like it's a gradual, like it's going down, but like some volatile moves, but getting smoothed out a bit. So I would suggest bearish momentum starting to ease off a bit. But again, look, I'm very biased here when it comes to the sterling, because I'm expecting sterling to bottom out. Let me just have a look at if you pardon me just for a minute, have a look at a weekly chart. So we've got major lows here at 153, and we're looking to potentially to base again here around 158. So I'd be buying this pair, no doubt about it. I prefer to be long. Am I going to be right for the next 300 points? No idea. It's this could easily can do anything once the Canada's involved. But I'd prefer to wait and look for buying opportunities in sterling CAD. Let's just have a look at dollar CAD again and see if any of that level we looked at yesterday. Let me just have a look at a longer term chart. Nothing there. We go back and look at is there anything? We'll look at what's going to be below one there. What's going to be below there? I mean, if dollar CAD breaks below 119.30, then you got more fresh air taking it all the way back here to 112. So it looks, yeah. Whilst I like cable, I mean this just looks dangerous to me, dollar CAD. I mean we're trying to pick a bottom at the moment, because that's what we like to do. But yeah, if 120.60 breaks and then 119, what was that level again? 119.20 breaks. Geez, this is going to look horrible. So and on a measured move, I'm not a big fan of measured moves, but they do, the market looks at them. So if you fell from 147 to 125, so 22 big figures, and from 137 down to sort of 115, yeah, so this could easily fall another 600 points, dollar CAD. So what does that mean for sterling CAD? It's just a timing thing. If does dollar CAD go first, or does sterling go first, or what happens? Don't know. Too hard, I'd say, for me. Sorry, way out of my pay scale. So I would I'd suggest caution with sterling CAD. I prefer to buy it, and I think it is overall. It's going to be a buy somewhere, but where that somewhere is, I think we'll only know when it gets there. So that's not a lot of help, but I think we just need to be cautious on that one. That level in dollar CAD, I think we need to keep an eye on that 119. 119.20. If that breaks, watch out. Now, so something I heard last night, and it was just after I was finished on the on this webcast, that the reason dollar CAD has been unable to bounce is that a big financial player has been just caught very long dollar CAD, and they're trying to exit a position. They're taking a massive hit, and they're trying to get out of stuff. So they're basically taking a 10 big figure hit. They're long from up on the long from above 130, and they're just getting out, taking their losses. So they don't really care about whether it's going up or down. They just want out, and we all know that feeling. And sometimes the pain level just gets so much, you just go, I can't bear it anymore. I need to get out of this. So yeah, we've all been there, and I hear that's what's happening with a major financial organization just taking a big hit on a long dollar CAD position. So whether they're out of it by now or not, that I don't know. But the way it's trading, just let's look at this on the like on the sort of on the 1 hour chart, dollar CAD again. Well, a bit of the old dead cat bounce about this one. So we had the yeah, look, it's just not bouncing, is it? So what doesn't go up tends to go down. So I think with all the CAD crosses, be careful. There's something going on here we don't quite understand, and yeah, it's not called a loonie for nothing. So extreme care warranted, I would say, in dollar CAD. Yeah, another one. Let's just touch back in on this dollar stocky trade from yesterday. This was the I think it was our friends at Citibank who liked this one. Sorry, let me get on a to our chart. So their trade was to buy at 7.95 with a stop loss at 7.87. So they bought yesterday around about here somewhere, and they had a stop loss at 7.87. So they were pretty safe, never got there, and they had a take profit at 8.10. Now we saw a pretty sharp rally up to 8.02. If they were clever, they'd have been taking half the position off here and rebuying back down here, but yeah, who knows what they did. But anyway, so that looks like still it's a fairly decent trade. I think there's some data. Did I see that out today in the stocky? Yeah, sorry, I didn't note it down, but I think there's some. I'm pretty sure there's some data out today. So again, that may have some impact on the stocky. So for those of you who are watching it, yeah, not a bad. It was a nice entry level. I just hope you took advantage of the spike to take a little bit off the table and have another look. So that's yeah, that's dollar stocky. Yes, I did forget to mention the UK CPI today. It's out shortly, isn't it? So keep an eye on that. So whether look, I wouldn't be trading it, but I think it does give you an indication of how the market's situated. So for instance, if the number comes out much better than expected, and the market, the market doesn't react to it, then that tells you that the short-term market is probably long, and vice versa. So just by watching how the market reacts to data can give you a very good sense of how it's feeling at the moment. So remember, we've got that big resistance level at 132.60. So let's say it's a bad number and sterling doesn't drop, it means we're probably likely to go up. So and remember, this data is generally leaked as well. I mean, it's disgraceful, but there's by all accounts there are 119 people, I believe, who who are told about this data before the event. So we now see cable starting. Now, has that number come out? Can somebody tell me that? If not, yeah, they've got the normally isn't 6:30 it comes out our time. So somebody's obviously got wind of something and started buying in advance. Shocking, absolutely shocking. So that's yeah, that's sterling. Let's have a look at the Aussie. Yeah, we had a bit of a dip today, down to just touched briefly below 80 the figure, and straight back up again. Like I said, pretty hard to trade this one. The positioning is long, and probably with perfectly good reason. But yeah, it's at 81 cents. It's come from 73 cents in a straight line. So why get bullish here? I can understand buying deep dips down to maybe below 78 cents and selling rallies up to 81 cents. So I think I'm in the range trading camp on the Aussie, and modest bullish bias. But at the moment, yeah, stay out of it and just wait for silly moves, and then you can put a trade on. So sell any stupid rallies and buy any stupid dips, and in the meantime just avoid. That's my view on that one. Aussie Kiwi has started to give up some of these gains, unsurprisingly. So let's see who's winning. Yesterday we had Morgan Stanley selling Aussie Kiwi and Barclays buying Aussie Kiwi. 1-0 to Morgan Stanley at the moment, and yeah, I might think this is overdone. I mean, like I've said for weeks now, this pair is in a 3-year range trade, and yeah, thanks very much. So the data's coming out in 2 minutes. So thank you, Andrew. The sorry, Aussie Kiwi. So we got the Kiwi election coming up in a couple of weeks, on the 23rd, I think, and the market is long of Aussie and short of Kiwi, as we saw yesterday. Probably the biggest position, that was the BNP survey, showed us the biggest position was short Kiwi. So or one of the biggest positions was short Kiwi, and one of the biggest long positions was long Aussie. So there you go, market's long, risk events coming up, market gets out, just typical. And we're in a 3-year range trade. So look at it. I mean, why are you going limit long this thing? Unless hedge funds are chasing after, hoping for an end of year savior, the so-called Hail Mary pass or whatever. So yeah, I think this is perfectly logical. This is just a retracement, giving up gains. I don't see the value in trading Aussie Kiwi, but then again, every man to his own. So we got the 10-second number coming out. So let's have a look and see. Well, look where sterling is now. So yeah, we and it looks like we're going to test the that 132.65. So here we go. Yeah, so thank you very much, John. This is, you see here, John Webb posting it from MNI. Yeah, so somebody got a sniff of it. I mean, it is really ridiculous. As I said, there's 119 people supposedly get a sniff of this data before the event, and it goes from 132. Where was it trading? 05 to 132.40 before the number comes out. Yeah, look at where's the stewards? We need a stewards inquiry into this one. That's just not right. Then the reason it's not going up now is because the guys who bought it 30 pips ago are now starting to sell out and take their profit. You know, it's yeah, little wonder people get you know, have questions about this market. It's absolutely ridiculous. So that's cable for you. We've all got to have a rant every day. So I've just had mine. Thank you very much. Kiwi. So look, it's held in very well. So I quite like the Kiwi. I know it's the old bashed up Kiwi. Let's have a look in the short. Sorry, back to the 4-hour chart here, and yeah, they just gave up on levels down here, didn't it? So we tried to form that base, but once it got back above basically 72, the figure, it hasn't looked back. We've got resistance here, 73.40. And it makes sense to be taking a bit off the table here, but I quite like this. I think we buy dips back towards 72.25, something like that. Maybe, you know, any level down here, just keep it small. And yeah, especially if that dollar CAD goes for a run, you know, and then breaks lower, then, you know, the Kiwi, you know, you can't imagine the Kiwi falling with dollar CAD falling. So even though it has happened sort of in recent times, I expect this Kiwi just to make up some ground. That the short positioning is just a little bit overdone. So yeah, that's the Kiwi. And just keeping an eye on sterling here, 132, you know, back at 132.40, 132.35. So yeah, market got a sniff of the data, and then now they just take profits. So yeah, enough said. Okay, let's back to the Kiwi. Take profit 73.40 and buy any dips back towards 72.25 with a bullish bias. That's in line with my sort of general dollar idea. So let's just revisit, while we're here, let's just revisit sterling yen. I mean, we were, I don't know, when we were talking about it, it was only a few minutes ago, wasn't it? Yeah, it was down here, wasn't it, somewhere around 144.75, and now we're already up here 145.35. So, and we've got some space. We've got some space to go all the way up here, but that's going to be strong resistance, I'm pretty sure. So I definitely would not be getting, you know, overly ambitious at these levels, especially 2 days ahead of the MPC. So yeah, sell into this rally, I think, in sterling yen, just at least for the next 48 hours until the Bank of England. Sterling looks like we're going to test that 67. Here we go. Yeah, and euro sterling. Look at euro sterling. Oh, jeez, can I now get really annoyed? You know, that's fallen 50 pips in the last few minutes. So we knew that level was some of the stops below 50. They've obviously gone off. Yeah, so it's all about the sterling, and I think the only way is up. There could be a song in that somewhere. Okay, I think that just about covers it from me for the day. Sterling up, dollar overall down. I'm still sticking to that view. Let me just have a look at my old favorite gold just before we go. Supports still the breakup level. Remember that one, sort of 12.95, 113 the figure. So I think that's the support level we need to look at. And there's still a decent chance, I think, that we could test up here, you know, 1375. So that's I think that's the range to trade, sort of 12.95, 1375. So an $80 range. Yeah, it looks a bit, I mean, obviously looks a bit toppy at the moment. I took profit, you know, up here, so I'm a sort of a happy bunny, but I'm quite happy to reload anywhere down around these levels. So I think it's, for me, gold is still definitely a buy dip, because the big risk is that it takes off above here, and we'll only know why after it happens. Okay, that's it from me. Keeping an eye on the old sterling. Yeah. just about, here we go, we're testing that previous resistance level. So yeah, if you've got any questions or anything, just yeah, be sure, yeah, fire away. Be sure to ask. 132.70 could be a big short. Well, it could be, but I don't know. I'd wait for the 15-minute chart or even the half-hour chart to form some sort of a top before I'd be advising to sell into this sterling rally. Anyway, that's it from me for today. Thanks for your time, and yeah, any questions, please fire away in the chat room. Cheers. Bye.